Okay, recording this video after close of trade Wednesday, the 8th of July 2020. It is 9:09 p.m. Chicago time. Hope you're doing well. Hope your trading is going well. And I'm having trouble putting out this video. I don't know why. I've taken multiple kind of goes at it. I was going to give up, but now I've kind of decided I'm going to record it anyway. So it's late in the day. Apologize for that if you're getting this kind of the next morning. But I do want to have a record of this turning point that we're going to see in the next couple of days. So I think it's worth recording the video. Anyway, we're going to talk about the E-mini and the dollar index, and we'll go through the high-level charts, kind of backing it down time frame by time frame. Just show you where this turning point is due and what it means. I don't think it's the end of this uptrend for good, but I do think we're going to have a little bit of volatility and kind of decide which way to go, and maybe test into the lows over the last few days with this end of trend pattern. But let me show you what I'm seeing on my charts at least. Usual setup on the right hand side, better sine wave, and all the indicators to do with price on this right hand panel. On the left hand side, everything to do with volume, better momentum and better pro-am. But let's concentrate on the right hand side with better sine wave. We're calculating all the cyclical activity kind of down here below. Very smart little algorithm, better sine wave, that gives us the cyclical energy in 3 different time frames: the low, the intermediate, and the highest time frame. Highest time frame is the thickest lines here, the lowest time frame is the thinnest lines. And then we use that cyclical calculation to determine support and resistance levels on prices themselves. And then when you break through resistance levels, that's an uptrend and strength. And when you break through support levels, that's downtrends and weakness. And the uptrends and strength are in red, and the downtrends and weakness in white. You can see, this last uptrend started where we bust through 2800 above resistance, and we've had strength ever since. But we're coming up to an important cyclical turning point here on the daily chart. This cyclical turning point, you can see it on all the indices. So the Dow, the Russell, the Nasdaq, they're all coming up to a turning point, but the levels are different. You know, the Dow and the Russell are the weakest at the moment. The Nasdaq obviously is the strongest, with breaking away to new highs, but they've got a cyclical turn pattern kind of in due on those markets. So whether that goes off tomorrow, Thursday, or Friday, kind of not sure, but it'll mean we're in for a little bit of weakness and testing some lows over the last couple of days. I don't think that's going to be it because it's not lining up with cyclical resistance on the highest time frame. Normally, when you have trending moves that end with end of trend patterns on the lowest time frame, it syncs up with a cyclical resistance on the highest time frame. And on the highest time frame here, the support to resistance has got some time to run, because these lines need to come up to 100, cross, and start to go the other way. So I don't think that timing is right. I know it was slow to plot the support here. It didn't come in right at the low, partly because this was, just a V reversal, and it was a very short, sharp kind of turn in there. So it didn't have enough time to calculate all of that change in cyclical energy there, so it got delayed a little bit by a week or more for that low. But on the upside, we tend to make highs slower than lows, so I think we've still got some time to run before this kind of rolls over. But it will be a point at which we'll get some resistance, and how we get through that is going to be interesting. Partly because we're so close to a gap fill here and new highs. So up here, the new highs, the highs that we had in the last move up, 32.20, and the gap fill type level here. So the high of that gap fill is 32.36, and then the low of the day before was 33.04. So between this 3200 and 3300 level is absolutely key. Markets love to fill gaps and get people all excited. It's sitting there, so stops to run and bust and all that kind of activity is almost too good for the professional traders to resist. So let's see what happens. We could just bounce off there at that previous high and kind of go for some serious weakness for a while, or we could just play with it and then have some exhaustion patterns or something like that. Because so far we have nothing really exciting on the upside. We're down in ranges, down in volumes, amateur up bar type patterns at the moment. Nothing kind of explosive. So will be interesting to see how it plays out over the next few days or week or so. Coming down a time frame, 135-minute chart, this is what I'm talking about, amateur up bars and kind of low ranges. So this is coming into that area, better pro-am, as a trailing stop. You know, it's absolutely key, 230 kind of up here. We bounced off here once. We're coming up with amateur up bars into that area. It's very weak in terms of better momentum. Pullback to end of trend, gone off on this low time frame, but it's still an uptrend here on this 135-minute chart, so have to wait and see. 45-minute chart, again, we're still in an uptrend. There's that coming up to Rambo patterns and so on. No exhaustion buy. This was the V reversal. We've had a few on this chart. So first one down here to look at exhaustion buy, getting the move going. So it didn't end it just petered out. The next time we came in, we had, again, blue professional bars coming at the lows, and we're just petering out in terms of better momentum. So I don't know, we're going to go through some kind of explosive mood as we put in this pullback to end of trend. Not sure. And the 15-minute chart, a little bit noisy, but there's those Rambo patterns up there. No exhaustion buy at this point. We've had all the energy has been exhaustion sell, which gives us, you know, the energy to rally from there because everybody's sold. Therefore, we rally, we go the other way. Everybody kind of was selling a few days ago with this move down, and now we're kind of back up. So no exhaustion buys at this stage. All red bars. You know, kind of background is red and so on. So we're still in an uptrend, but that cyclical turn is in due. Now, can we get anything from the 45-minute chart? This is the highest time frame tip bar chart. We got so much volume rolling through. I used to say that the 4500 tip bar chart was equivalent to a 45-minute chart some years ago, but these days there's so much volume kind of rolling through. They're not equivalent. It's even a lower time frame chart than the 15-minute chart. But it was a good trade, the last one I had, just showing you some levels here. So I got out at 31.70 last week, 2 weekends ago, when I was putting out a video saying we've got a rally into the 4th of July, so kind of get long. I was in long at 30.46 and then out at 31.70. So that was a Monday to Monday trade, which was quite nice. That was 124 points. Which was good. But with this latest weakness that we've had with today's activity, I'm back in 31.39 because of all these blue professional bars. So we had exhaustion sell, bullish divergence come in with that was Tuesday into Wednesday. We test down with a flush pattern, blue professional bars coming at the lows there, 31.30, and then we fuss around 31.40, blue professional bars kind of coming in there, just getting ready, and then they just buy everything in the stack, bang, bang, bang. We bust through that high, and we're kind of away. It does mean that the 31.37 level is absolutely key. If this is a fake move and we don't go up to 3200s and a little bit further, 31.37 is absolutely key. So the bars are red at the moment, the background's turned red at the moment. We're above support on better pro-am. We're above support in the highest time frame on the 45-minute chart. So we've got a chance at this over the next couple of days, but we will have some weakness, and so I should probably be putting in a target, an appropriate target for tomorrow, Thursday, maybe into Friday. But let us see. But just alerting you that that cyclical turning point is coming up on a whole bunch of charts. It's also coming up on the dollar index as an inverted kind of pattern, kind of down here. So on the dollar index, this is the daily chart of the dollar index. We're in a downtrend. We're below support in the highest time frame. We're putting in pullback to end of trend. And you can see here, we're coming down to make that cyclical cross. We're a day or two away from it on the dollar index. And we're coming into kind of 96, 95s, kind of down here. So let's see how that kind of plays out. But with the market going into a topping out move, then having some weakness, that usually generates strength in the dollar index as a safety play. So I don't know, could be an interesting point. cyclical turning points on the highest time frame. The dollar index is closer. That's in due in the next few days. You know, if you look on the E-mini, we're a long way from there. We're just breaching the zero on the fast line, and we're below zero on the low line, on the slow line. Totally different on the dollar index here. We're coming down to make that cyclical turn, and it's in with support on the intermediate time frame. So that's going to be important at 95, 90, 96, 95 down here as a cyclical turning point. So that's interesting on the dollar index that that could come in. We could get strength in the dollar index from there, and then get a sell-off in equities as the dollar index kind of rallies. So interesting turning points kind of happening for the time being. You know, whether we gap fill, don't know. Whether we go through an exhaustion pattern, don't know. But just watch out because of those turning points on the E-mini and the indices and things like the dollar index right now. Anyway, so there we go. Enjoy your trading over the next couple of days. Keep alert, I would say.